Hello Arun, very good morning. Hi, welcome to the stream. Hi Abhishek, very good morning. Uh, okay, so markets going up. I think I should switch. Okay, I think this should be a good entry for puts. I'm going to enter in. Maybe a little bit more spike I can enter in, I believe. I'm thinking of entering into 44,000 put. Gordon. So I expect some sort of rejections over here and the market to come down. That's why my opening trade is around the put side. I'm going over there because there is a gap. Maybe very likely chances for it to come and test, and I don't see it clearing this R1 that easily. So which is the reason why I entered into put. It's my risk. I'm just saying what I'm doing. Right. This is not a call. This is only like I'm saying what I am doing. Hi Divya, very good morning. What's up, guys? Anyone entered in with any positions as of now? Are you guys still waiting for right moment? Continuing to rally. So I will not do any further averaging over here. If it breaks, then I will wait for it. Because for me, the opening candle's length is this. If I convert this into a 15 minutes candle, you can see that the next candle does not cross the peak. So I shouldn't be worried about anything. As long as it's not breaking, I don't have to bother much. Because these are great entries, you can really make more out of this. So I'm waiting for that. Awesome. So I exited that scalp. With this fall, I exited it entirely because it gave me a good return. Um, I entered at 245, exited at 257, 14K booked. So this gives a big leverage now, right? Like you have done some good opening trade. So I can risk 14.5K done, right? Now with this, maybe I wouldn't mind losing 7K. I can just get a little bit more aggressive trades. That's why it's important to wait for the right opportunities. When it comes, maximize it. That's what I did. Now my writing positions are doing absolutely fabulous. I am continuing to hold that. This one I took about 80 lots. So that's why even with a small fall, you see that no made some quick money. So Divya is waiting. That's cool. Maybe I will try to adjust my edges. My edges, something I took at 10 rupee has become 6.5, but that is like so super far away. Just to minimize the risk, I wanted to take some more positions. Okay, I adjusted my edges, which were like 40 to 300. It was kept at 42 300. I brought it to 42 700, so that my downside risk is kind of uh, limited now. Hmm. From unlimited loss, it has come to maximum loss of 2.2 lakhs. Okay, so that's a kind of restructuring that I have done, and I will continue to do this till everything gets eliminated. So you entered into P at UT2. Great, Abhishek. That's wonderful. Hey Rajesh, very good morning. Welcome. Market was a little bit bullish. No, not at all. Market was not bullish. It's a flat market. Just some upside moves are there, no doubts about that. It's a small minor moves, but there are a lot of proving to be done. One, it has to clear this UT2 level. Second level is that it has to clear this and then enter into the zone where you have multiple levels of resistance: UT3, UT4, UT5. There is 200 EMAs. Then breaking which you have UT6, and I have very strong doubt whether it will clear 44 300. So many levels of proving is there, and only a short covering rally can take off all together. So maybe if there is any sort of breakout, that should be the short covering rally helping in clearing all these levels. If there is no short covering rally, market has to go step by step and clear all these levels. It's going to be a Himalayan task. No trade zone for now. Uh, no, UT2 is a good place to enter into puts to me. Okay, I am just waiting for next levels of entry. Once it comes to and touches UT2, I'll re-enter again. For those of you who missed, I already entered at UT2 and then I booked my profits over here. Now I am waiting for the second entry. So both the sides have got some serious erosion. Last week, all the strikes that I have written was around 230, 245, uh, everything. And right now, almost all of it is trading like 125, 160, 203, and 180. I'm talking about both calls and puts, different strikes, and almost like 70, 80 points got eroded. Potentially, there could be a breakout today. Uh, why I'm expecting a breakout? Because it's a consolidation for some time. Breakout means don't expect some 1,500 points breakout. It's going to be some maybe 400, 500 points of directional moves that I'm expecting. Um, because every time market consolidates in a zone for some time, like you take this sort of consolidation over here. This is what Wednesday, Friday, Thursday to Wednesday. Then it had this fall. So anytime market consolidates in a band for some days, that is very likely breakouts. Ideally, it can consolidate to even 2 weeks, but if it is going to consolidate for 2 weeks or so, the breakouts will also be super massive. So, will geo financial listing have effect on Nifty? Surely it will have some impact. Let I mean, I have not done my uh, research around that, but if they are going to list it as a financial, geo financial is going to operate more like a bank. Um, Certainly, they have money power. You can always, even if Geo is not into financial segment and then they are doing something else, they have such money power that they can impact any index. That's their power. But if they're directly entering into finance, obviously it's going to have some massive impact on it. But then I was not even aware that there is something like Geo Financials going to come, so I need to go through that. This is only the gut feel and impressions that I'm sharing. So it looks so painstaking, right? Like no clear opportunities. Taking a position, suddenly you see a green candle is going to hurt. But what I would say is that simple discipline. I found one opportunity here, entered, and then I captured here. Right, that is one. Between the trades, keep about 20 minutes of gap. Right. So obviously, if there is no movement, don't bother. 950 and 955, we will get some opportunities. Quickly, we will pounce on it. That's how you should, calm yourself down. If you're too much excited about taking an order, then it's going to cost us. Wow, Abhishek is giving a massive update on Reliance, Geo financial listing. So he's saying that there are thousands of crores of money at disposal into the market. Certainly, we will see. That's what Geo you can always uh, have a great control over how the index can be managed. Definitely, you can never write it off. We are in 15 minutes time frame. Let's switch to 5 minutes to get more details. You see, went up, peaked, slowing down and coming down. The moment it breaks, you should expect some sort of downside moves. Hi Amit, very good morning. Hi Sudhar, trade, very good morning. Welcome. Hope you guys had some great weekend. Mhm, mhm. So, um, I would be super happy to enter into the put as soon as it touches these levels. I will go in. If it breaks this high, then maybe it's going upside, but I will not consider this as a stop loss. I will continue to hold because I made some money in the morning trade. So I'll go on to average till the levels of UT3. That's what I would do. Good, it's down to 1000 P. I need to add. Strange. I think still the delay exists because this candle is turning green and the put values are like jumping 5 rupees. So still that, okay, there is certainly a lot of delay. No problem. Yes, there is a definite chart delay. Honestly, could have taken some positions before, but it's okay. No problem. We anticipated this. Any which ways, I will look for call entries now. I'm entering into the call side now. Just I'll be back. I'll just use washroom and be back. Okay, I'm back. So you can see that market has come down pretty steep from there, and I am entering into the call side now. I think the premiums are a bit cheaper on the call side. I would enter. Mhm. So definitely there is some sort of issues with the graph because when it is going up, the call values are decreasing. I fail to understand what's happening there. So there is a delay to safely assume that. So maybe 5 to 7 seconds of delay. With that in keeping that in mind, we got to be a bit smart over here. Mm. Hi, very good morning, Nihas. Yes, Abhishek. That's exactly like you think that the market is going to go up looking at the chart, and suddenly you realize that the prices are falling, and then now the chart is turning red. Kind of disappointing to see that. Um, Unfortunately, we have little control over that. That's okay. See, here the candle is green, but there it is prices dropping. So, bit disappointing to see. Sure, Abhishek. I think it's better to stay off if you feel there is some sort of disconnect with the chart and the price, and then you're not comfortable. Yeah, sure. Why not? Mhm. I'm holding on to the calls. To give you an update, I have done some averaging. I'm holding on. This particular thing is giving me somewhere around 4,000 to 6,000 rupees of loss. It keeps fluctuating as the price moves. So this leg is on a loss of about 5,000 to 6,000. Now it has come down to 1,000 rupees. It's swinging super fast because I'm holding large quantities. I exited about 30 percentage of the quantities, trying to maximize this leg because I have taken some good volume. And if I can discard like every 3 rupees gain, uh, like 30 percentage, then I can hold on for a little long with the last leg. So trying to maximize that way. So the reason why I was entering onto the calls, anyone said that the market was going to go down, and then I entered into the call somewhere around here. Why? Mhm. Yes, right. It filled the gap, and UT1 is a support. Plus, there is 200 EMA likely to consolidate for some time. Even if it is going down, it would consolidate for a while and then go down. Probably everybody is expecting a gap down. People will be like, thinking that this is going down and enter aggressively in the put side, and this is where they dance. So that's why I do contra trades because some risk I take against the trend, and that's more rewarding than actually following the trend. A lot of people would disagree. A lot of big players would criticize my style, but this is something that works for me. That works for me. So no worries. Yes, even if it's consolidating, I'll make money from my writing. That's true. That's true. So a lot of traps will happen on the downside, and then they will suddenly scale it up like beyond our imagination. So amazing. So the reason why I was doing a counter trade is this. You can see how beautifully it has given some returns. Sudden spike. I don't know. The chart is not reflecting over here, but then it spiked up like anything. The call values that has spiked up very seriously. Already, this leg is giving about 10K profit, right? So nothing is visible in chart. Yeah, the chart is not updating at all. So it's clearly delayed, no doubts about that. It's like, turning red and the prices are going up. It's turning green and the prices are coming down. Some sort of nonsense is going on. I don't know if the price is the relay issue or it's some sort of, I don't know what it is called, but it's fine. Having said that, you got to just chase out and then take out the profits when you don't have some, when there is a discrepancy in the price movement and the uh, index. Better that's one of the reasons I was exiting the positions, like, placing some price and then executing it, because you can't really trust this. You just need to exit and then manage positions through writing. It's a very risky day for buyers. If the updates are not happening, then it's pretty scary, right? Like, see, the prices are now, it has gone down significantly bad, downside. Now I will use this as opportunity to enter. Ah, so quickly that they are, what to say, before even you could realize anything, it's all like happening super fast. Done. I'm exiting the last 100 that I got. Superb. Fabulous returns. I'm going to exit the last rung of my entries are 270. 270, I will keep it. It should go without any kind of problem. Already it is giving me like 2% returns. Mhm. Yeah, that's right, Abhishek. What you're saying is absolutely right. Since there is a great delay, either you got to have, good stop loss and then accept it, or you should lower your sizes very significantly. I have already brought it down pretty significantly. I was having close to 180 quantities, 180 lots in total of all the averages put together. Right now, I have brought it to only 40, and that also I'm going to reduce it. Yeah, I if any further fall happens or something like that, I will not be going on to average. I would, because, and one more thing is that I don't do buying all through the day. The first hour I do it because there is movement. The rest of the day I don't do any buying. I just simply enjoy writing. Sure, Abhishek. Good. 23K is very good. Definitely. So this is the area where I expected it to consolidate, right? Few candles, and it looked like it's going down, and then it went up. Again, it looked like it gone up. But then you see that it is all the various kinds of traps. But then I expect it to consolidate around here, which is why I entered into the call side here. Not so much I expected it. Just that couple of candles of consolidation I expected, but then this is like fourth candle, which is pretty good. So when it is falling like this and then it's reaching like 200 EMA, at least couple of candles, some pullback. That's what I was trading for. But this is like fourth candle. Still holding on to my calls. I'm not giving it up yet, um, because if I see a sharp spike, it could be a good game changer. It can absolutely maximize things. I placed an order at 270 for 20 lots, but even expecting it to go further higher than that. Uh, I'm talking about the strikes 43 800 call. So currently around 261, 262. Um, Placed at 270. And if it gets triggered and then it goes further higher, I would like to trail the last leg of it as much as I can. So it's gone down to 250. Added some more. Towards the day's low. These are some quick scalps that I am looking for, not really too serious about. Hardly some 5 6 points with volume I'm trying to capture. That's it. Done. So that last run that I entered, I exited. Just volume I was able to capture, so that even if there is any sort of significant fall, it's not going to hurt me. My average I brought it to 258. You know, it has entered below 260 just now. At least some couple of times it has entered below 260. So I am maintaining an average at 258. You can imagine. So it's really a good way to maximize. I don't want to lose this opportunity because today there will be a lot of traffic. And very clearly on Friday itself, I said that market would maybe even if there is a breakout after 2 hours, not the first hour or first 2 hours, it will not move much. It will be in range and then it will be contained. And, uh, and why I am expecting the 2 hours of consolidation also I explained on Friday's stream. Uh, Pretty much clearly said that if it is on that day it was not clearing UT1 and LT1, it was holding up between that. So we realized that writers are having a complete control over it. With weekends coming in, they would like to maximize it, and they can maximize it by holding on Monday morning in a particular tight range, which they are doing right now. Right? Pretty clear. So it's not just that blindly going and buying something, expecting that it is going to consolidate. If it is consolidating, what are the potential moves? Which side it has potential to move? They already reached downside. Most likely it is going to go on the upside. That is one. And that's where the band is. Plus you have 200 EMA, days low over here, UT1 over here. Many things are favoring the analysis. So we wait on the call side without having to rush. Still, I am holding at 270. Only the fresh entries I entered at 253 and then exited at 258 or something like that. Some 5 rupees, 6 rupees I got in that, but for 100 lots. Let's check the comments. Am I correct? It's inside candle. Yes, it's an inside candle. The first 15 minutes, yes, that was an inside candle. I was hoping the same for you. Yes, thanks, Amit. That was great. I was enjoying my time. A lot of Netflix and then reading some uh, books. It was good. I also spent time with my child. Strong sense. Today's geo listing. Okay, I see. Was not even aware of these things. Yeah. Um, not comfortable taking trades with this delay. Yes, I will buy 40 lots of C, OTM, and 20 lots of. Holy shit. Sure, you can do that because Monday only can do. Timing is correct only to do such OTM strategies. But don't go too OTM. If it is consolidating in this band for another 2 more hours, then you will lose big. So maybe 2 levels outside OTMs you can try, like 44 100 call and 43 700 put, something like that. But don't go too far away. It will erode pretty fast. Oh, you have gone with 44,000 C and 43 800 P. Yeah, good. If you want to really lower the risk, then you can switch to 44 100 and 43 700. You know, just to reduce the risk. Because both the premiums will be very high. For you to achieve the break even, the market has to move more. But if you're going one level down and up on these sites, 270 is executed. So good. I have absolutely maximized it now. This is what I was talking about. It really had triggered all. This call side itself is giving one more than 1% profit now. Mhm, mhm, mhm. Oh yeah, yeah. See, when you're entering into this differential trades, whatever you set a number, 10 rupees you're making on both the sides, you exit that trade, create a fresh, strangle or something like that. Uh, since the charts are very pathetic today, don't stay too long. Take some 10 points exit. If you have to shoot in the dark, don't bet too much on that, right? Like, it's okay to maybe shooting in the dark is kind of fun. You might hit something, a jackpot, but wow, 1 second. Let me exit all. I see some sort of moves. Go, go, go. Come on. Okay, excellent. I exited all at 275. Awesome. Very good. Now my net profit stands at 3%. Right? And this is only opening trade. There is a lot of time left in the day. And this is inclusive of the writings that I have taken. Not that, today morning I created some 3%. In fact, the intraday basis, what I generated is not bad, 2%. So 2% from intraday and 1% from positional I have done. So this call side had given me good profits. Fabulous. So now I don't need to really worry about getting onto any side. Just I will not be doing, because for me the opening trade is the first 90 minutes. Already some good returns. Maybe buying opportunities exist till 11 o'clock. That's okay. Um, because I just exited my trades, all closed all the call positions. I definitely have this discipline. Once I have closed my entire positions, I don't trade again. I just wait for 20 minutes. But in 20 minutes, it becomes what? 10:45. So 10:45 means that 15 minutes should I take risk? No. Already 2% done on intraday. Why should I take, right? So no more buying. Possibly I will do the buying in the second half, because as a buyer, understand your role. You need movements, and movements means just quick movements. If you're making money between 9:15 to 10:45 or 11, good. If you're making money between 2 o'clock to 3:30, good. In between, if you're buying with no everyday expiry, with low VIX environment, and lot of traps happening, and delayed charts, brokers hanging up, so many variables out of control, and somebody may have bad internet to top it up, right? Why should you take so many things? Just limit your trading hours to first hour and second hour. Take that money, stay out. In between, manage your writings. Simple. Money can be made very simple. In fact, I will make one YouTube shorts now. Um, just give me some time. I want to do post something. Who are these idiots? I don't even understand. They simply call spam calls, just coming and disturbing every time. Somebody from Indore is calling since last week. At all the critical junctures they call. Is there any way to, I mean, I'm manually putting them to spam, but then is there any way to just, stop these guys? It's an harassment. Okay, someone's sold my number, so can't do anything. Just, it's so annoying that, You can't rest peacefully. Every time that I go to sleep, sometimes I'm so exhausted. I go to sleep, I have to ensure that it is in silent. And then even if it is in silent, sometimes it vibrates. The vibration also has to be like taken off. Otherwise, they are bombarding with calls. Like on Saturdays, I'm getting like 40 to 50 calls through the day. Don't know what to do. Maybe I should change my phone number. Hey, very good, Abhishek. You made 4% of the deployed capital. That's amazing. That's super. So Abhishek has three numbers and then he turns off. Cool. Uh, this number has been. This is the only number I have been using for so many years. It's more than like what? More than 12 years. I'm using the same number, and everybody has this number. So to update it, kind of okay, and still is changing a SIM is not a big deal. Okay, look at that rally. Oh my god, it has gone to 298. I would have been richer if I had held on to that, those many quantities. It's fine. I would get into the put side now. Yeah, I'm going to play this both directions. Okay. I entered into the put side, taking some risk. Okay. So let's see how it pays off. Excuse me. Superb rally is happening on the upside. Mhm. Okay. Uh, I will just finish editing this short. Just one moment. It's just some silly things that I started doing. Done, done, done. Okay, so oh, a lot of text message over here. Okay. The rally continues on the upside. This is the pricing. So cool. What I did is I did a great average of puts over here, and already it is in big, uh, good quantities I've taken. Like 180 lots I took, 80 lots I took somewhere here, and then 100 I took over here. That 100 I booked over this drop. So current position I'm holding 80 lots, and if it comes down to this 9 EMA, that'll be amazing. Okay, I think I have to say my wife is leaving for work. I'll just say bye to her and also check baby and come back. 5 minutes. All right, I'm back and seeing some sort of good moves happening. I will exit my call puts in phases. Just 20 lots I will keep exiting as the price goes up. Exited. Mhm. I think the buying opportunities are getting washed away. So much of zigzag movements, you guys will have a lot of trouble. Should I hold 44,400 put? That's a big deep ITM. You can hold on. Um, See, most likely it's going to be coming back from this zone. So it's pretty much I'm expecting, if at all it goes at UT3, I'm expecting it to have a strong reversal. So I am holding on to my small quantities of puts. That's what I am doing. going to be not such a easy task for the market to go up from here on. I am expecting strong rejections between this R1 level and UT3 level. This UT3 level is 44.67. This is where I will be very aggressive on my put accumulation. But then here itself, I'm expecting some strong rejection. So that's why I'm waiting for the market to come down so that I can exit in phases. Not much, just about 30 lots I'm holding. I was holding huge quantities, almost like 180 quantities. Then 40. Then at some point I exited 50. Then another 40. Like that I have. Then 10 I just discarded at different prices. So currently around 30 quantities I am holding. That's it. I'm going to check. Cool. So Um, okay, I exited all my put positions. And further, okay, now what I'm going to do is simply going on to write directional. Instead of buying options, I will be writing options from now on directionally. For example, if my view is bullish, I'm going to write put option. If my view is bearish, I'm going to write call option. Instead of buying CE for upside expectations, I will be selling puts. That way, my deployed capital is, you know, I'm committing maximum capital and avoiding risk, because if I can go on averaging, there is no limit to that, right? Like I will continue to average to the extent that it's never ending. So having made some decent returns, it's also not the time for me. My trading style is that, I do buying at certain times, I do selling at certain times through the day, and right now the time for buying is over, so I'm switching to writing. So what I have also done is, by doing this in the morning time, my max loss was, I mean, positionally, my max loss was around 3 lakhs, 3 point some lakhs, I don't remember exactly. Then I reduced the risk to 2.27 lakhs. Now, with all these things, my max loss has come down to 1.7 lakhs, right? And I'm going to just, bring it as low as it can. And this is the max loss it's showing for today. But yesterday, I mean, Friday, I made profits. And the previous day, I made profits. I'm just removing all those profits away and counting this. So there are some legs that were created last week. I closed that some at 4,000 rupees profit, 5,000 rupees profit, and then created a fresh leg. The fresh leg position only is giving me 1.7 lakhs loss. It should give one maximum losses 1.7. But if I count that, I'm already in profit. This position is absolutely free of cost. No, now I'm going to attack as much as I can and to do some sort of aggressive writing. Instead of doing aggressive buying, I can switch to aggressive writing now. funny. There's such a spike that the premiums are just shifting. It's unable to decide where it wants to go. Both the C and P premiums are going crazy. Because this is one area I'm expecting a very strong reversals. Mhm. Mhm. Hi, welcome. It's me, Dot 71. I mean, what is your price of entry? What is the uh, see? This is big loss running. Please, if it is already running in very, I don't know how many quantities that you took. Just give some sort of context. Big loss means I don't know what is a big loss. It could be some for someone it is 1,000 rupees is a big loss. For someone it is 50,000. So please do. Okay, you have taken 44 at 231. Okay, where is it running now? You got to do some sort of averaging, and I'm very clearly saying that it will be rejected at UT3. That's my viewpoint. And what you want to do with that information is up to you, right? Like, not here to give calls, but then um, at least some views that I share is that I expect the market to get rejected. This is a power zone. Previously, it got rejected over here. You can see that. Again, it went up and then it got rejected. So I'm expecting a strong rejections around these levels, undoubtedly. So if it falls bare minimum, it should reach the peak of this level around 968. It should reach, and after that, it can reach UT1. You know, um, the scope for upside moves for me is very very less. It's just that you trap and then come down, erode the premium on the call side very dramatically in the second half. So right now, what they are doing is eroding the put side premiums as much as they can. And second off, they will come one straight line to this levels possibly, and then erode the call side. So but when did you enter this? It's me. Like, at what time did you enter? Did you enter it today or were you carrying it positionally? How come it's giving you big loss? 44, 400 at 231. Are you saying that 43, 400? Are you saying 43, 400? Please correct if it is 44 or 43. Because this could be very serious. 231 it cannot be, right? Like it has to be 43, 400. You are holding an OTM. Definitely it's a very wrong thing to do. Absolutely wrong thing to do. You need extraordinary luck. Yeah, you need extraordinary luck to get into profits. At the money only is like trading around 200 levels. You are carrying an OTM means last week you have taken this position. I mean, I think it's the same position which I mentioned on Friday you are carrying overnight. Is that correct? The same position that I was saying that you should not be holding this. I mentioned it on Friday. That was 44, 43, 400 only, I believe. On top of that, you have carried it overnight. It's a disaster. Oh, this is not being held on from Friday. Then how can you? Okay, fine. Let's look at things. Just a moment. Hello. Yes. Oh yeah, 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 yeah. Fine. No, no, I don't give any cost options at all. I just simply interpret the market, and then you guys wanted to take some positions on that and all. It's up to your risk because I'm not, no, I'm not a SEBI registered advisor to give any calls. Okay, just that I am sharing my views, and then maybe you want to trade it on a paper trade, or you want to take a live trade. That's all your risk because it's your money, right? So since 2008. Mm, haha. Right, right, right. I get it. Huh. Okay. Okay. May I just have your name, please? Hi, Steffi. Okay. Um, so I am actually doing a live stream right now. Most likely, oh, you saw that. Yeah, I'll be taking a break in some time. So should I call you during the break? Uh-huh. Oh, is it? Actually, I'm. Okay, okay, okay. Sorry, I think. Yeah, yeah. I am streaming actually right now also. So maybe in another. Hmm. Hmm. So you work or you work or you're a full time trader like. Hmm. 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 Sure, I think I will. Hmm. 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 Sure, I think. Hmm. So definitely, yeah, definitely there are a lot of things. Uh, hmm. Right. I, okay, okay, okay. Sure. Sure, I would be more than happy to share a lot of ways to work around how you can improve. Uh, yeah, see, basically one small exercise I can give you. One small exercise I can give you. Just you have sensible account. Just add the strikes of 44,000 C and P. Okay, just watch the strikes and then see what's happening to those premiums. Don't trade, just watch. Just watch. Oh, oh. Hmm. 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 See, choosing a broker and all these things is yes, it's important. Hmm. Hmm. Correct, correct. No, any broker, if you are going for any other brokers like banking related, like SBI, Capital, or ICICI or Kotak, their main business is not. This is one of their business. This is not the only business. You should choose some brokers that are only into this. They have no other business than doing brokering, right? See, I am still in stream. One second, Steve. I am still in stream. What we can do is, I will connect with you. Yeah, I will connect with you after some. Yeah. Okay, I just had a call. Um, one doubt: will the fund managers manipulating index will be connected? Uh, the fund managers. No, I see. Fund managers may form cartels. or they may act independently. But most likely, it is going to be a cartel sort of thing, because you wanted to really take a huge retailer's chunk. It's going to be definitely um an unsaid cartel. I mean, these things, I don't know if it is okay to discuss in a stream. I would be happy to have this sort of, discussions over a call or in person, because somebody may get offended, right? So, who knows? But yes, having said that, it's not a very clean market. That much I can say it on the face. There is a lot of manipulation. There is a lot of, um, you know, uh, very crooked workings are going on. There is no denial about that. But then to call out any specific names would be really asking for trouble, so I wouldn't do that. Yep, I mean, yeah, irrespective of whoever calls, they all are losing money, including myself. I've lost money in trying in the process of getting back on track and then running. All I see is that people are at different stages. That's all, and each one needs some sort of guidance. Somebody doesn't know, they have just started, they don't know where to start. Some people have studied chart patterns but then don't know how to make use of it in a live market. Somebody just says that I've been doing for last 10 years, I need strategy. you know um, Different kinds of requirements are there, different challenges are there with people. Some people have done reasonably well, but then everything is going for the brokerage. What do I do? I mean, the kind of challenges and questions that I see are almost like pretty much I can put it in some buckets and say that, yeah, these are the possible questions people ask. Because so many interactions I had with people till date, and all are linked to only one of these things. I know I'm extremely new. I don't know where to start. Can you guide me? I have been doing, but then I don't see how to make money consistently. Is there anything that I should be adding to my charts? Any EMAs? What do you suggest? Things like that. But then ultimately, what it requires is continuous commitment to master one index. See, if you're losing some 20,000, what happens is you see which other market is open. For example, you lost 20,000 today, then you go and play in crude. Then there you lose. Maybe you go to crypto and play there. There you lose. You will be playing in the currency market. You will never focus on one thing. For me, it's only this: whether you win or lose. You want to wipe off your capital playing only one index. That's fine. Bank Nifty you want to play and lose, you lose. Nifty you want to play and lose, you lose. But then stick with one index. Otherwise, there will be no learning. Okay, rule number one is that if you ask me, just don't pick up stocks, don't pick up anything. Just do only one thing. I am doing only Bank Nifty. I can very well do Nifty. If I can manage Bank Nifty, Nifty is nothing for me. I can easily manage, but I'm not doing that. Um, wow, some aggression on the downside, right? Uh, See, I can easily play in other indexes now with the kind of balance that I have, balance in the sense mindset that I have, and the risk management and all the other things that has worked very nicely in the past few years. I can very well shift and expand my portfolio. But then I have taken only additionally crude. This year, first edition is crude. And I started only last month. because of only one simple reason. It's at a different trading hour. I don't want to trade in another index at the same time where Bank Nifty is operating. That's my thought process. So what I will do is that I will play only in crude, and then when I reach a state where crude is as close to my heart as Bank Nifty, and then I get that command over that, then I will think of adding more. Right? Right now, I will not be even uh, worried about taking a new index. Now I see that a lot of people are so excited about FinNifty having some expiry, Sensex having some expiry. People are just looking at every expiry as an opportunity for their capital. But every expiry, if you don't understand the index, every expiry is a threat for your capital to expire. Okay, so you can just blow off your capital on that day alone. So be careful. People have lost wealth on expiry days without realizing what's happening. Hmm. So I'm going to square this off. Come on. Okay, exited. 3.8 percentage done. Yeah, very well done, Rajesh. That's correct. That's very correct. You cannot just it's definitely a journey that's going to cost you a lot. People are very much having this fancy idea about becoming a full-time trader. You, honestly speaking, you will reach a point where you will question yourself so many times. Have I, is this the worst mistake I have done in my life? Can I go back and correct the decisions that I've taken in my life? Should I have really entered into stock market? Extreme depressions, extreme anxieties, sleeplessness, fear, and brutal. Market will treat you brutal. And after all those journey, you feel that okay, there must be some way I need to calm down and then be disciplined. And then you will say that I'll be disciplined. And then 3 days you see you make some 3,000 rupees, 3,000 rupees. Fourth day you will think that I learned the market, and again you will lose. To earn this discipline, to earn this enough, you should have faced enough number of beatings, enough number of times you will be punched on the face. You would have bled so much. You would have wiped off your capital so many countless number of times that now I am still recovering. I might be making say that 5% done, 2% done, 3% done. But even at this rate, it would take me 3 years to recover everything that I've lost in the market. Not easy. Okay. So don't get into the fancy idea of becoming full-time trader just because somebody is streaming, somebody is showing some sort of and that's why I don't like putting those shorts or whatever money that I made. It makes no sense. But looks like that is what attracts people to YouTube, and then trust someone to subscribe to someone. So doing this dirty job, I'm not into this. I don't like it. But if that's what is going to bring people, yes, I'll do that. So kind of sad. Reality is that so many people wanted to be option, no full-time option trader without realizing how much that they are standing to lose. It's if you have lost, you have some 10 lakhs, you lost the 10 lakhs, that's okay. But you will lose 20 lakhs, you lose 30 lakhs. That's what will happen. How? You will find ways to get money to lose. That's what will happen. Okay. So the road to recovery is too deep, and don't step into this journey at least having absolute confidence and absolute no paper trading will work. You got to step in and lose money. Only then it was real learning. But keep an account. Probably you should bring in such a capital that you start off your journey as a writer. Understand it, because ultimately what will happen is you will lose so much, then you realize that yes, it is only writers that make consistent money. But before you reach that conclusion, you would have lost some 5 to 7 years and lost more than what you can afford, and so much pain. And then realizing, yes, then when you see that money is coming from writing, oh my God, what a foolish decision it is. I've saved so many years and so many years of no, pain. So, yeah, it takes time. Even after explicitly saying this, the problem with the mindset is that, maybe it is for you, not for me. I am different. Maybe you are not as creative as me. I know how to be more creative. These are the probably there is some sort of stories of some guy making some 40,000 to 1 crore, like Google Hindi, I believe. Then there is also another guy who made some quick strides from 5 lakhs to some 4 point crores. This guy. And then these are the stories that we come across. But then it's all like once in a blue moon. And the same people also lost money. You will see them becoming overnight success, but they also have lost money. What is the status of these people now? They are having, of course, they have made money. They are. I have a lot of respect for these guys. Only thing is that people they will project only the success, so that they want you to take part in buying. Okay. Yeah, market is an instant punisher. Absolutely well said, Rajesh. Absolutely well said. So Devang Pandey says that I'm starting my investment journey. I'm a student. What should I do? Should I invest or shares or mutual funds or do something else? Of course, some from my experience, what I can say is that don't put all your money in one basket. First thing, as a student, you should be more focused on is to get into gold bees and nifty bees. Get that, because you're not directly trading anything over that. Every month, maybe 1,000 rupees, like SIP you put on that. See how it is growing. Okay, that becomes over time. When you're ready, let's say that you want to become a trader after some 5 years. Okay, in that process, you want to learn. This is what, if at all, I have all this knowledge that I have accumulated over years, and then I'm starting fresh. This is what I would do. I will simply go dump whatever money I have, not in FD, just simply put it in gold bees, nifty bees. Start accumulating. Okay. Say that I have accumulated in 6 years about 10 lakhs of things, right? I will see to pledge. I will also take some sort of yeah. My target would be like, say, let's talk a capital of 25 lakhs. Okay, my distribution would be like this: 10 lakhs I will buy Nifty and Gold Nifty, Gold Bees, Nifty Bees and Gold Bees. Then another 10 lakhs I will be going on to buy stocks. I will keep that. I will accumulate some high potential stocks that gives consistent revenue in terms of dividends and things like that. Then I will keep some 5 lakhs of cash in fixed deposit. Just leave it over there. Now, when I start my trading journey, say in the meantime, let the money grow. You just go and accumulate the knowledge. Whatever is needed, you go and accumulate that knowledge. Come back. When you're starting a journey after, say, 5 years or 6 years, um, pledge your positions, whatever you're holding. Don't sell it. Pledge your positions, get the cash. Then pledge that fixed deposit, or even you can bring that money into your account so that it acts as a cash balance for hedging your positions. Do writing. You have 20 lakhs of 20 lakhs worth of Nifty Bs and stocks pledged, and 5 lakhs of cash left for hedging purpose. Become a writer. Simple. This would be my way, and did some so many silly, stupid things. Huh? This is what I would suggest, Devan. Hey Prasad, sorry I missed your message. See, this is a no trade time, uh, because you will see some sort of sudden fall, sudden. It is going to be zigzag. If you want to play positionally, maybe you want to accumulate something of the month end contracts. Put is what I would suggest. No more calls, because I am expecting a strong rejection around UT3 levels. I'm expecting it to go down. The problem with buyers is that say 44,000 put maybe trading at 300 rupees, and then the month end contract may be trading at 450 rupees. Now you will be thinking, I have 50,000 rupees, I can buy month end contracts 100, but if I am taking a weekly contract, I can buy 150, because 150 I can buy. You will go and then take weekly expiry, but what is the risk you are putting yourself? If it goes from year to year, you're done. But month end contracts, you don't have to panic. At least some 20 rupees loss will come. So if you're playing small capital, if you have very limited, tight, you know, money, go for month-end contracts. Even if you can buy only one lot, go for that. It's me dot 71. I don't understand why you are holding on that position. I said 44, 3, 400 is absolutely waste to hold. I have mentioned it countless number of times. It is worthless to hold 43, 400. Rather close that off and see some other strikes, ITM strikes you may want to consider. If at all you are keeping a bearish view, any view for that matter, whether you are bearish or bullish, play either at the money. At the money is where the market is trading. Now it is trading at 44k, around 44k. You would be looking at 44k C or P. Or if you're seeing some sort of ITM, then 43 100 P or 43 200 P that you should be looking at. Oh, 44 kPe. You have switched it to 44 kPe. Good. Sure. I think that is much more sensible old than 43 400. See, you got to decide one thing here, guys. Whether you want to play for the levels or you want to play for the points. It's a very important question. You want to really, play for levels or points. Decide. For example, in this trade, I want 20 points, or I'm expecting it to reach UT1. So when it comes to UT1, whatever be the price, I will close it. What is that you wanted? From my experience, sometimes it might come and touch, but it may not be the best price. Sometimes there will be a quick spike till here. From 200, it may reach 250, and you can exit. And sometimes, it reaches here and then consolidates and touches here. When it touches here, it is only at 230. You know, sometimes Not sometimes. Most of the times, it's not the levels that you should be looking for, it is the points that you should be looking for. I don't know if that makes sense to you guys. Don't wait for levels. Till which level means I can say UT1, and certainly it will go and touch UT1. But maybe it is at the same price at what you bought because of erosion. Maybe towards 320, it goes and touches here. What is the point? You have been holding it all day at 200, it becomes 170, and towards the end of the day, when it touches here, it becomes 200. What's the point in holding all day, right? So choose points than levels. Okay, I would take some bit of break now. The stream will continue to run. Only part is that I will have to make a phone call to the person who called while I was streaming, as well as I have to have my breakfast. So maybe about 20 minutes to 25 minutes I would need. But in case if there is any sudden spikes or sudden moves, then I would join in and then share my views. Okay. So I will be tracking from my phone, but in case if there is any sudden spikes, I will join very, very early. If it is consolidating within this zone, like plus or minus some 40 rupees, it's moving. Doesn't you don't have to rush. I will come join in 20 minutes, maybe 12, 12, 5. Around that I will be back. Okay. Okay, back. Sure. That's completely fine. Okay. Hello everyone, I'm back. So you see that the market is almost at the UT3 levels. I have added some more puts to my, you know, buying. I did because at UT3 definitely I wanted to buy. So with the spike, I bought it from my phone, and right now it is at 4 rupees profit. But I would like to uh, look for some 10 points because I got it really dirt cheap. So definitely a great opportunity for us to capture some 10 points on the put side. That's the reason I have entered into the put side at a very cheaper price. So when it quickly falls, I will be squaring off those positions. Small profits I'll keep adding, and then no, eventually by the end of the day, it becomes a very significant chunk. So I was saying I will not get into the buying side, and then I entered into the buying because it has reached UT3. As long as it was staying at this levels, I will not be doing the buying. So where I do the buying is very important. Towards the maximum resistance place, playing directional looks very lucrative. And I have also done some sort of call writings as well. But right now I add some sort of put positions in the buying side. Reason being, I'm expecting a strong pullback from here. So it will eventually be rewarding. That's why going for this. Because this one was trading around 230 rupees, 240 rupees in the morning. I'm talking about 44,000 put. Right now, I'm able to buy it at 184. It's a good deal. So, so exactly you see that it got rejected at UT3, right? Precisely here it got rejected. So riding along, I'm just trailing my profits. 4470, yes, stop loss is okay. No, that's not my stop loss, that's my entry. But if you have already entered and then you feel that this is where you should be averaging more, and what could be the stop losses when it crosses like 44 120 or something like that. You know, 1 second, I got to make some payment for water. So yeah, Pradeep. So I you will be so surprised. I took something at 185 over here, 44,000, and when it went here, I got it at 177. And this one I went for about 200 lots, and then I covered that at 190. So it gave me some very significant boost. Now I'm continuing to hold the other quantity, like about 100 lots. So still it is in profits. So that way, that's how you generate quick profits through scalping that acts as a buffer for intraday positions. So one more round of scalping. So 5 rupees only I captured, but then it was good to keep my average as low as it can. You know. The erosion is at super peak, just with the small increase it has gone to 169, 170 levels. Um, I will go on to take more buying till it breaks this level and then see if it is going towards this R1 level. Until then, I have very good bandwidth to hold on. There is no problem. I will continue to hold. So let me also check what is why data suggesting. It is showing that there is bullishness. So amazing. So I was able to make about 5.5 percentage. That's pretty great averaging that I did at the top. Um, that originally I was waiting for VWAP to get this 5 percentage. Since I took a lot of averaging here, I kept on averaging, and then here itself I was able to get that, so I exited all the positions. Most likely there should be some sort of week should I keep, or I'm just thinking if I should be shifting my positions to something more. Let me just work around. So I just shifted my straddles. What I did was I was holding a lot of positions, 44, 700 put, 800 put, 900 put, so on. And then calls were like 44, 800, 900, 44K, 44, 100, like that. So since the market has moved to the peak of it, I wanted to switch some of the positions. So I closed the ones that were in significant profit. Something that I wrote at 240 was around 78 rupees. So I covered that up and I closed all my writing positions and converted into a straddle, a short straddle of 44,000. Both calls and puts of 44,000 I have written. Okay, so shifted my positions. So anyway, let's see if there are any questions. See, you might be, seeing the sort of pattern over here. There is a trend line that's been formed, right? It's good. It's good that it is having a trend line. Only part is that there is a power zone over here. So this power zone is where market gets brutally, pushed back. So you got to wait and see whether it's holding up, and then how is the OI data standing in the second half. Right now, it's saying that the puts are having some short covering, which means a lot of people are writing off puts. I mean, buying their puts, whatever they have sold, they are buying it back, expecting a reversal. So it makes little sense to be on the call side. You because you have been waiting all these whiles to uh, enter into sell on rise. The market has already peaked out here, and until otherwise, we see the reactions over UT3 level. There is no point in getting onto the call side. If it becomes a short covering rally, only then you can expect this levels to be cleared. Otherwise, it's going to be massive challenge for call side to move further higher. And how do we also know that? Just go back and see. This was one rejection. This was second rejection. Go back in time, and this acted as a support. But the moment it broke, this acted as a resistance. So just go back in time. Here it acted as support. Go back in time. So this is why this zones are very important for you to observe. See, when it pierced and then it acted as support. So on June 28th, it entered the zone above, and then it breached only on when? Let's go and see. It breached when? Only on August 11th. So for about 13 days later, it came and broke. Now this is first attempt. So what is this date? August 14th, right? August 14th is when it broke, right? Otherwise, it was finding support until then. 14th. Now today we are on 21st. So 7th day, would it immediately go back? Very minuscule chances, because this zone has acted as resistance once, twice, and thrice. This is the third day. As a support, it has acted as 4 times, right? So going to be very big challenge for it to clear, and let's see how this zone plays out. That's why I would say uh, jumping onto the call side at the peak is going to be very big challenge. Maybe somebody don't want to miss out an opportunity and then want to take some positions, desperately wanting to take some positions, then should try month end contracts. Probably something like month end contract of calls and current week expiry of put, something like that. You can try. So there is a W pattern formed, which is an upside pattern, and followed by a short covering rally, can take it higher. All has to sync for it to go higher. Mhm. One of the things I might try to do is I will exit all my writing positions towards the end of the day. Even if it is profitable, I will exit it. Because if there is any sort of rally from here, almost like 400 points will happen. I'm not sure which side it is going to be. I have written this only for the intraday purpose. As soon as I get some 20 points, I will square this position off. So the real question is that which side it's going to break, and for which we will have to see how it is responding around UT3 and how the OI data is going to evolve. Um, some of you may be wondering, this guy also was like taking the put side. I am in loss, and how did this guy make profit? That sort of questions will be there, and simply answered. I have a rule of deployment. I'm going to talk about it. So I go 1, 2, 2, sorry, 2 and 4 rule. So supposedly I buy, say, 10 lots in my first trade. I'm giving you an example. Next average at a very critical point, I will go 20. And next I will go another 20. And at last I will go fourth average 40. So if my first order is 40, then you can proportionately multiply, right? So this is going to be my deployment strategy. So here, what is happening? 10 lots I am buying at 184, right? Price went to 176. I got 20 lots. So where is my average? My average is somewhere around 179 because 20 lots I am buying. Again, it went to 173, sorry, 171. I did another 20, and then I saw that it quickly went up to 180, and then again it started coming down. Again at 170, I took 40 lots. Now, if you look at it, the average of this is only around 175, I would say, right? 175 or 176, that's what my average is. And this position, I entirely exited at 184, which was my original entry, right? Now look at it, this many volumes, and then this average, and then you exiting at the cost price itself. Bare minimum, I am exiting at the cost price. Now, what you are seeing is a massive profit, right? That's how I am able to exit a thing. Now, if you say that you have, let's say, you have about 1 lakh, you will not be having this sort of setup. What you will be doing is first maybe you will go with 45 quantities. Okay, maybe then you saw that some loss has happened, then you will straight away jump to 105. By this itself, some money is committed. And the third one, maybe somebody would go even 150 straight away. And when price goes to 171, you are left with very less capital. Probably you can buy only 45. By doing this, what happens is your average is somewhere around this one, and for you to achieve a break even itself is very difficult. What I am doing is, as the price gets extremely cheaper at the day's low, I am buying so much volume that it's almost like my average comes to day's low, right? And from there, if there is a small recovery, I'm able to get into big profits. Hope that clarifies. Guys, can someone say hi in the chat? No, I always go for this 120, 20, 40. That sort of, yeah. Hey, thanks, guys. Yes, I see the message now. Uh, so the deployment is this, and trust me, this one in the morning I bought the same thing at a 221 morning trade. It was a 221. Then I went and averaged at a 208. Then again I went and averaged at 201. Again I averaged at 202 something. Okay. Now my average was somewhere around 205 or something. Very, very, very small. And then I was able to exit this trade at 216. So this is how I was able to generate that. Okay, it's not simply it's might look so simple, but I'll tell you the flip side of it. You take 10 lots, then no 150 quantities. You got it at 184. It has gone to 176. You're already seeing a loss of about 4k. Okay, let's say 4,000 rupees. So you are seeing some loss. You took this again at 20. Now it has gone to 171, right? When you see 171, your losses are 10,000 rupees. You will be like panicking. Oh my god, so much loss. I should exit all these things. But you should have a view, strong view, that it is going to get rejected at UT3. That is my view. That's why I was comfortably averaging. I cannot change my view because looking at the loss, right? Simply looking at 10,000. Oh my god, what if it becomes short covering rally? You can always be afraid. The moment you take position, only you can be afraid. But keep that aside and say that what is the logic for me to enter into this trade? I am expecting a rejections. Did it not reject? Yes, one rejection, two rejection, three rejections. That's exactly what I wanted. So it did reject. It did reject, and that's why I was able to go with this sort of volume, increasing volume and increasing I mean, dramatic. See, if you look at this one, the average 171, 170, I'm doing successively 20 lots and 40 lots. First itself, you can go for 60 lots, you might say. But what happened was that when it went to the first time, 171, it went to the peak, and then here it was 171. Now, when it went here, it became 170, right? So for me, it is not about what is the price when it is here, um, how much cheaper that I can get. And I understood that the moment it touched 171, it quickly came to 180. Then I realized this is because 10 rupees it's getting jumped in no time. Within fraction of seconds, it jumps 10 rupees, which means this is a great price. So getting it at 170 itself is a very good price for me. That's why I jumped on with good quantities, and then I was able to exit. So deployment is everything. What are the key things to remember? Here, one is that money deployment itself is a, you should have plans for money deployment. You should know when to average with respect to the view that you hold. Okay, so I was holding a view that it should get rejected at UT3. So that was my view. Third, risk management. Now, what is the risk? Suddenly, if it is spiking up, what is the risk? Say that it becomes 165. I will square off everything, right? 165. If I am seeing, then there is no point. It has pierced through. It has held it, and it has broken the day's low further and further. Maybe I'm losing my profits. From from 5% profit, my profits have come down to 2.5. Okay, 50% loss has happened from my profits. Let me close it. That's it. We'll see another day. That's all. Worst case scenario. And this I can do because morning I've been generating. See, I will morning trade. I will usually not. Almost like 95% of the times I get it right. 95% of the times I know successfully I'll get the opening trade correctly. Once I get that, that gives me a lot of confidence. Okay, first cases I'm losing from my profits. It did happen. From 90K, it came to 50,000 rupees, 55,000 rupees. From profits of 90K, it became only like 50,000, 55,000. I went down to average. Now I exited all the positions at 1.32, right? So this is more than enough. Almost what? 5, 6, 5.6% done. So money deployment, when to average, risk management, and all these things are good. On top of that, if your morning trades are right, you will have enormous confidence. So this is all is needed. See, don't be surprised, guys. I have a very strong gut feel that the market might come down, but I also don't want to say too explicitly because everybody feels that I am more bearish, that sort of a wave I don't want to leave. I can say if there is a breakout, you will not even believe. I will just jump on with like 2000 quantities on the call side. You will never know. I'm very, very fluid that way. But only when I get a confirmation, I'll do that. I will not just like that, jump in. Till my weave is rejected, I feel that, oh my god, I've been holding this weave for so long. For several hours, I am holding that. And if I have to change that weave, from supposedly I made a put as a weave here. Let's assume that this is the candle I decided market is going to go down. For example, market came, it is a retracement. I'm expecting the market to go down. And then something I did average, and then I exited in profit. Something I did, I exited in profit. Something I did, I exited in profit. That's all great. Now all the positions are closed in green. Now, what is that view I was holding? I said that no, this level should reject it so dramatically. If it is not rejecting, if it is just clearing and then reaching UT4, let's say, how clearly my view is broken. I should not be so rigid in saying that now also I will go on for the puts only. And how I do it is, I will not be like closing this put because this put is already giving me a loss. Something that I have taken at say 240, let's say, it's trading at 160 rupees. So big loss it is, right? If I have not done anything, it is a massive loss. Now I will not be going by buying a call and then closing my put. If I am holding say 1,000 quantities of this, then probably I feel that the market can go up. Then I will convert that into a strat. So what I will do is, as soon as the market reaches UT4, I will choose a strike that is trading at 90 rupees on the call side. Go with 2000 quantities or 2500 quantities. If it is going up, what will happen? From 160, the put side will go to 140 rupees, 130 rupees. That's it. It will, because it's a 44k strike that we have taken, it will decrease, but then it will have some intrinsic value. It will not go beyond a point. It will stagnate. So it will probably come down and stuck at 120. But the upside has no restrictions. From 90, it will jump to 150, 160, 170, and that way I will ride on that, and then the moment I see the overall positions coming in profit, I exit. So one strategy that I did last week, Divya was aware of it. Some of the people who were on the stream were aware of it. That's what I would do, right? So all these are possible only when you have cash deployment strategy in place. You cannot simply deploy 100% of the capital and then say that, oh my god, I don't have capital to buy three times the calls. Then you have not done your back work, right? So if you don't, that's why buying is a too big of a risk. For me, writing is a lot more simpler because I don't have to worry about it till it breaks on 300 points or 400 points on a weekly expiry. So, but as a buyer, you're always on the edge. Did it break UT3? It pierced but got rejected. This candle is still has 2 minutes, so I will not say that UT3 is taken out. A lot of people close their positions thinking that okay, UT3 is broken, let's wind up. No, it's not broken. We still got 2 minutes of time. What if this becomes red candle, right? Then you are trapped on both sides. You have taken call, there also you got trapped. It's coming down, then put positions you squared off, you will make double loss. So never panic at the edges. When the market has reached the edge, don't panic. It's going to be a confirmation. Either it is going to confirm you the uptrend has begun or the downtrend is going to come. So I already committed with the put side. Loss is going on, let it run. Because if it falls like this. Think about it. It falls like this. It doesn't fall like at the power zones. It doesn't fall like these sort of falls. No, this sort of fall will not happen. It will be always like this, right? So if it gets rejected, let's wait for that. If it is giving you a confirmation of breaking upside, then go double quantities on the call side. So you got to have some sort of game plan. Okay. So one of the reasons why I closed all the calls of 43, 700, 800 is where if it is going to test here, this becomes deep ITM strikes and then it will appreciate super fast. That's one of the reasons why I closed all my writings position here and created a short straddle over here. 44k I created. See, that's what it is. Compartmentalization is very important. Some positions are done for weekly basis, some positions are done for month end, some are done for intraday. You want to have a plan for all of it and then parallelly execute. So I not only booked my puts in profits, I also realized that there could be some sort of challenges when it comes to market going up. So closed those call positions as well. Like entire writing is squared off and created a new short straddle over here. Of course, that's running at a loss of around 1,500 rupees. That's nothing because in writing, you will always, as soon as you initiate the position, a straddle, if the market is moving, you will see a loss. There's no doubt about it. But eventually, what happens at the end of the day is all that matters. Clearly taken out. And what is OI data suggesting? Short covering is said. Yep. I can actually do some sort of, I can buy some edges for my positions. One second. Mhm. I'm going to write some directional. Cool. Projected 118 only. Time is already so much. No, this is not right. Either we are going to clear off this level, either we are going to clear off this level today massively on the upside, or it's going to get beaten like anything, because this is pretty strange. So fast that they have entered into the zone, and almost like 2.5 hours left. So 2 hours 15 minutes left. Um, Smartest thing to do would be to go for strangles, long strangles, buying of call and put together at a cheaper price, maybe 100 rupees. Things can be bought. Okay, I have second of some busy things. Life coaching and chess classes are there, plus some small work is there. I will be ending the stream in another 5 minutes because I have some commitments to take care of. Um, Most likely, the views alone, I will say, um, uh, it has entered in. So slightly, now if I was holding a put, I will be a bit concerned what to do. But I will not close my puts. I would rather add some triple quantities of OTM calls. That's how I would manage my risk on the downside. And then, if the market falls, yes, I'm making loss on the call side as well. But from here, what I'm expecting is a serious fall. So that will totally cover up everything that I'm losing on the call side. Even the losses on the put side will be covered because my average is kept to the neck. If I have been giving, and that's why I said, should we play for levels or points? I always place for the points so that my average is close to where the market is trading. Although my first entry of put was at 221 rupees, my average has come down to 177 or something. For the whole, what to say, buying and giving, I have played more than 1,000 lots throughout. Full morning trade, in between trades, and till the last trades. More than 1,000 lots were bought and sold. And my average stands at close to 177, right? That's what it is. Um, Now this is a rejection. So if it falls, it will fall pretty bad, and I would even say that it can come to the levels of pivot. So massive moves are there. I was saying at least 2 hours market will not break out on Friday, and this is not a breakout. This is a slow and steady climb. It's not a breakout. Now is the point where the market will decide. A breakout means it should clear off certain levels. Either it should clear 44,300, or it should just, come and then breach this. At least test this pivot or breach, and enter into a new levels, like, go down further. Let's see what side it's going, and I see a large red candle over here. That's pretty reassuring. Cool. So if you guys have any questions, feel free to ask. So you calculated 15 and 25 points. Fantastic, Divya. Fantastic. So if there are no questions, can call it a day. Okay. So I'm ending the stream here on TradingView. Thanks everyone. Looking forward to meet you all again tomorrow. So guys, here on YouTube, if you guys have any comments, I wait a little much longer. Just let me know if you have any questions or anything. I'm sure I've clarified whatever I'm anticipating. Some sort of breakout, I don't know which side they will break out. I honestly don't know. But whichever side that they are moving, it has to clear certain levels. On the upside, if there is some sort of bullishness, exists only when it clears 44,300. Remember that 44,300 it has to clear in order to say that yes, this is, now it is we are entering into bull territory. If not, if it gets rejected and comes down fast, for bare minimum, all I'm seeing is that it should come and test pivot. Once it comes and hits the pivot, then it might close down here, or if it is taking some sort of serious downside moves, it may go and test even 44,600 levels to 500 levels. So this area may get tested. Okay, so anywhere in between, it's the writer's day, so the writer's control, you can't do much about that. But as a buyer, these are the two prospects that I am looking at. If there is, because 2 hours left, it should make some decisive moves, most likely. If not, then I will be, if there is no breakout today, I'm going to square off all my writings for the day. Why? If they are closing in this range, again, let's say it closed here at the pivot, then I'm seeing so many days of consolidation in this level. Now, why should I hold my writings here? Supposedly there is a gap up of 500 points, and from there on 200 points of rally continues. Whatever I do, I'm going to lose. Right? I would rather have free cash in my account. So if it is breaking from here, then I'm happy because I can continue to roll on, and then it gives me a sense of direction. Okay, market has cleared this level, it's going to be bullish. I can go on adding more on the put side and then adjust it. That is possible. But if they are closing in this level, I'm not going to carry anything overnight. I will square off. That decision I'll make by the end of the day. Okay. So that's it. Thanks, Divya. Thanks, everyone. Looking forward to meet you all tomorrow again. And again, I will be doing only short streams on Monday and Tuesday because my focus is more on Wednesdays and Thursdays. Fridays, we can keep it optional depending upon where the market is so that I save some personal time. Yeah, that's it. Thanks, guys.